Hello, trading is closed on October 30th, 2013. I'm Jeffrey Tennant, and I'd like to discuss today's very interesting stock market action. There wasn't a mejt signal for today, but based on other factors, I thought we had a reasonable chance of a top within 2 trading days from yesterday. I think there's a chance that today's high was it. Let's go over the reasons, starting with today's action. Early in the day, there was a buy signal right here, but mejt said if the rally happened immediately, it wouldn't stick. There was a target that we would go over the line represented by these dots, which we did. There is typically resistance over mejt targets. It's not obligated to hold, but it did. Then we had a drop. mejt says this drop is not for keeps, and it targets a return to 1771.13, most likely by early Monday. I think there's an increased risk that this won't work, and the reason is mejt likes to leave failed targets at times of major changes in trend, of which this may be one. In the afternoon, there was a sell signal calling for lower prices, and that worked, but there was also an alternate target that we would trade over this line, which we did. mejt also said that trade wouldn't stick, which it didn't. That price wouldn't stick, which it didn't. Now, as of the end of the day today, we have this unfilled target. Let's go over why I think it might not work. Yesterday, we had a target of 1748.14. We gapped up and didn't come close to it. The rules say this price should still print sooner or later. Today, we had an outside reversal day. Higher high, lower low than the previous day. I don't like it when we hit new highs and close red, but I really don't like it when we hit a new high, close red, and close under the range of the previous day. In my book, not the book I wrote, but just my opinion, I should say, this negates yesterday's rally. And when you negate yesterday's rally, it puts the 1748.14 target back on the table. We still need confirmation, ideally by rapidly trading under today's low. I won't know if that'll happen till tomorrow, but there's a real chance we're going to see this low and a lot lower in days to come. Let's use some non-mejt analysis to see why. This is a 65-minute chart, and it reminds us that when the market rallies, we typically have higher highs and higher lows, and the higher highs tend to hold. We hit a new high today. It didn't hold. The last new high didn't hold. The last high before that didn't hold, and the last high before that didn't hold at the low. I'd feel a lot more comfortable on the reversal if they didn't hold at the close, and that's why it's still somewhat iffy. But if we close under today's low, pretty soon it could start a pretty good move down. There are a number of systems based on other people's work that have the price of today's high as a reasonable top and the time of today's high as a reasonable top. I can't go over all of them, but let's go over some Fibonacci relationships which people who use Elliott waves seem to like. A lot of people who use Elliott wave like the 127.2% move. And you can see from the low back in 2009 to the high in 2010, the next high came exactly at the 127.2% range from this low. If we consider this an ABC move up, and this is leg A, and this is B, there's leg C equal to leg A. And if you consider this as leg A, and this ABC is leg B, then leg A times 1.272 equals leg C. It's a very pretty pattern if we stop there. And I think there's a good chance that we will. So the call is we have a higher target. I think there's an increased risk the target will not print in its preferred time frame. We have a lower price target, and I think that's going to be seen.